thanks for stopping by my market report. This market report I bring out on a daily basis. We kind of go over the impact of mortgage rates, what's impacting them on a daily basis. So we kind of go over economic reports, and we go over headline news, what's driving the markets on a daily basis, and what to look out for. We kind of look at more at trends. We don't go into so much rate quotes primarily because those go into there's plenty of other sites for that. There's just too many variables that go into a rate and also different loan programs. So it's just better for us to kind of just go over, let you know if rates are going up or down, or if they're going unchanged. If you guys want that personal rate quote, you can please feel free to reach out to me. I'd be more than happy to. We can get one specific for your needs. My name, a little bit about myself is my name is Mike, and I am a loan officer. I do work with a national lender, so we can help people in all different states. If you guys, even just about, if you don't have questions about rates, we can certainly help you answer questions about different loan programs or whatnot. So if you guys got questions about any of those, or looking to get pre-approved, or looking to buy a property, or if you're looking to refinance, please feel free to reach out to and give us a try. Without further ado, why don't we jump right into this report? We'll start off with economic reports. Nothing major scheduled for today. In terms of economic reports, we do get this daily base or this weekly from the MBA, which is kind of talking about loan applications. So on the purchase side, we see a decrease from week over week. And on the purchase side, with the rates kind of dipped down, they kind of increased last week. So let's jump ahead to headline news. This is going to be more the impact of the news. Stocks are down. They were down yesterday, and they are down today. And the big thing, really, kind of what's driving it is FOMC minutes going to be released today. Investors are kind of waiting to see what the Fed's thoughts and process behind closed doors in terms of the CPI report that came out pretty hot. They want to kind of see because the Fed's been pretty adamant about saying that the inflation's been transitory, but investors don't necessarily agree with that assessment, and they want to see what they're thinking. So there's been a lot of concerns again about inflation. They're also looking at earnings reports. We are getting some good earnings, very good earnings reports, but those are almost going to be put in the back seat if they are still concerned about inflation, because that's going to take the precedence over anything else at this time. Because what happens is that inflation erodes the value of any assets that's out there. So especially on mortgage-backed securities, that's our biggest enemy, because what happens is mortgage-backed securities are bonds, and that is a lifetime or investment over a 30-year period. So if you got something like inflation going upwards, that kind of takes away that value of that long-term asset. So without further ado, let's discuss mortgage rates, see what's going on with them. We are at zero, so we're still unchanged. This whole week's been pretty much unchanged level, even from Friday. So we've had some ups and downs a little bit, but right now, as you can see here, we even started lower. Yes, so we kind of started a little, but we did work our way upwards. So it's possible we could continue going up a little bit. We did late in the day yesterday. We did have a price improvement because we ended up closing up 13 basis points. Even though I believe when we did this yesterday morning, it was down about 2 basis points. So we've had some fortune seeing it steadily increase. So pricing based on yesterday's to today's, I would say from yesterday morning when I did this report, it's a little bit better pricing. But if you look at the close, we're about the same as where we left off yesterday. But for the most part, you should see from when we did this report, pricing should be a little bit better than what we saw yesterday. Again, it's not a huge amount. You're talking maybe about maybe an eighth of a percent in the rate, because you're talking about a quarter in a 1/8 of a 1/8 of a percent in the pricing. So again, there could be some tight pricing margins in there that could bring you up to that 1/8. Here's a look at yields. Yields are also kind of that sideways pattern. It started off higher and it's come down. It was kind of testing its 25-day moving average, even this technical level here. So we'll see if that holds or if we can break below that again and come back to where we were the other week. All right, folks, that's pretty much the gist of it. Again, from yesterday's report, pricing is slightly better than what we saw yesterday. Otherwise unchanged from where we closed yesterday. And but there will be a lot more market activity probably after the FOMC minutes are released, and that will be 11 o'clock Pacific Standard Time. So prepare for some volatility, some choppy waters ahead. Right now, it's just kind of bracing itself for it. So the stock market could rebound, and then we could lose some mortgage-backed securities, or money could go back into both. We could see some wild movements in there. All right. So you guys have a great rest of your day. Thanks so much for watching, and we'll see you guys tomorrow's. But also, one more note is if you guys like the video, please hit the smash that like button. We greatly appreciate it. It does help out our channel. And you guys have a great rest of your day. Thanks so much for watching. Bye bye.